Welcome back, and we are potentially at the bottom of the market as we have seen a crypto crash ongoing for multiple months now. And this was after the major Trump pump, the market moving to the upside after the election, with a lot of anticipation of pro crypto policies and pro crypto moves in the market. Well, we've seen some of that, but we haven't seen the price moving higher. Really, after the Trump pump turns into the Trump dump. Anyway, in today's video, we're going to be discussing this in detail. We're going to go through some different topics, some other bullish news in the market, and we're going to talk about the SEC. We're going to talk about BlackRock Europe and what they think about crypto, and it's not that good. And we're also going to discuss kind of the ongoing drop in Solana activity, Solana revenue, Solana fees, Solana transaction activity, and what this means for the rest of the market, because some of the sell-off could be due to the Solana meme coin frenzy that we kind of experienced last month. So let's kind of break it down, let's discuss it, and understand, are we at the bottom of the market, or do we have more to fall? Don't forget to give this video a free thumbs up. Also hit that subscribe button. That way you never miss a new video. If you want to help support the channel, click the join button down below to learn about channel membership, or you can use the super chats in the comments below. So let's start right here. Bitcoin's $70,000 retracement, part of a macro correction in the bull market. Now, really, we have to kind of understand, are we in a bear market? Like, are we rotating into a bear market? Are we just in a bull market correction, aka a bear trap? Or are we in kind of sideways moving territory? And so while Bitcoin may experience a retracement to $70,000, this remains part of an organic correction within a bull market, according to Nansen analysts. Now, when I'm recording this video, Bitcoin is 81,000, Ethereum is 1,900. Obviously, by the time you're watching this, the prices may be different, but this shouldn't change the kind of macro analysis. I've told my viewers over the past few weeks that I believe we could potentially go down to $50,000, maybe even $40,000 Bitcoin. I remember during the previous cycles, we saw altcoins specifically, because keep in mind, Bitcoin is still literally at all-time record highs, especially it's still past the previous cycle high. The previous cycle high was like $60,000 or $70,000. Now we're at 80,000, so we're still above that. Where many of these other cryptos, including Ethereum, are not. I mean, Ethereum hasn't even hit its all-time record high, let alone still be above it. Solana did hit its record high, and keep in mind, the record high was about $250. This past year, we hit basically $250, $260. So it retraced the same all-time highs that we had back in 2021. But we didn't surpass that. That's a big difference, right? So Ethereum hasn't even hit its all-time record high. Solana hit it and then came down from it. And Bitcoin hit it, surpassed it, and is still above it. And if you look at the rest of the market, it's kind of all over the place. Some of the cryptos are multi-year lows. Some of them are at record lows. And remember what I told you guys, during previous cycles, we actually saw some of these altcoins hit pre-ICO prices before they actually reversed and kind of went back up. But going into the title or the thumbnail of this video, I was right. Bitcoin pullback feels like 2017, according to the Abra CEO, and he predicts what is coming. Now, many of you guys know Bill Barhydt. He's the CEO of Abra Crypto. He posted this tweet thread. Let me pull it up. Now, before we go to the tweet thread, let's kind of understand a little bit more what's going on. Bill Barhydt, founder and CEO of Abra, a global platform for digital asset prime services and wealth management, took to social media to highlight the cyclical nature of Bitcoin corrections. He wrote, and I'm going to go through the whole tweet in a minute, "Y'all never change. Bitcoin is now experiencing its 11th 25% plus correction in 10 years. And every time everyone reacts like the sky is falling, and every time everyone screams that it's different this time. This pullback looks, smells, and feels just like 2017 to me." And so effectively, what I've showed you guys more recently in my videos is the idea that many people are looking at the 2020 through 2021 bull market as kind of like the benchmark for where we're going to be this cycle. But if you really look at the price movements, specifically more in the altcoin space, like with the rotations, it actually looks more like we're on the track for 2017 and 2016 kind of time frame. What we saw in 2016 was the markets kind of moved up to the upside in the end of 2016 into 2017, and then they kind of settled down until basically the middle of 2017. You started to see movement in the market, and then the major move was in the end of 2017. Very, very similar, specifically when we look at some of the altcoins like Ethereum, right? Because there were basically no altcoins back in 2017. It was Bitcoin, Ethereum, XRP, and I think that's it. I mean, just a few different forks of Bitcoin as well, but there weren't this like thousands and thousands of coins. So yeah, I actually do think what we saw in 2021 and the moves at the beginning of the year and then at the end of the year, a lot of this was due to the pandemic assistance that was kind of pumped out into the economy during 2020. But we haven't really seen that occur last year in 2024. We didn't see really any money printing. In fact, we saw the opposite. We saw the tightening of the money. And now we're hearing, government efficiency and layoffs in the private and public sectors. This could bring us into more economic turmoil, but eventually there's going to be a turnaround, and I think that turnaround is probably going to be happening in the next 3 to 6 months or so. And when that turnaround happens, for whatever reason, whether they pass laws to print more money or businesses just get better funding because the rates are going down, or whatever the situation is, or a combination of all of them. Bottom line is, I think we're going to start seeing the major moves in the market in the middle to end of the year. But I also believe that we are earlier in this cycle than we have been previously. So remember, the halving was 1 month before it was in 2020. In 2020, it was in May. 2024, it was in April. And so I think that the whole market is kind of readjusting to where we're going. But anyway, what Bill Barhydt specifically wrote in his tweet, he said, "Y'all never change. Bitcoin is now experiencing its 11th 25% or more correction in 10 years. And every time everyone reacts like the sky is falling, and every time everyone screams that it's different this time." He said, "This pullback looks, smells, and feels 100% just like 2017 to me. Rising fiat liquidity leading to massive asset price gains. Right now, the new administration has decided that we need 1, lower treasury rates to refinance debt. 2, lower mortgage rates to unlock the housing and commercial real estate markets. And 3, lower treasury rates to save banks from their collective insolvency." Now, we're going to get back to these in just a minute, but he continues saying China is in a deep recession and needs lower U.S. rates to support its own money printing regime, and print they will. We're likely going to see massive job cuts via government cuts, tech cuts, and housing-related cuts. At the same time, ISM will likely rise for the next several months. And all of this tells us liquidity will continue to flow to the markets. All of this tells us liquidity will continue to flow and the markets will do what they've always do in this type of cycle. That liquidity will flow into stocks, Bitcoin, crypto, and real estate. Once again, he says, buckle up. Now, a lot to unpack here. 1, yes, if you look at the 10-year yield, this is lowering rapidly. We also know that the president and I believe the Treasury Secretary as well stated that interest rates needs to come down, right? And so the Federal Reserve needs to actually act. Now, we're going to be hearing from the Federal Reserve next week in the middle of March, and this is going to be very interesting, not only what they do at that meeting, right? Because some of what they do is going to be priced into the market. It's really about their forward-looking guidance, what they think about the next meeting and the meeting after that, right? If they come out and they're like, yeah, we're only going to cut once this year probably, the markets are going to crater even further. They may be wanting to do this. That way they have to come out and do an emergency rate cut, and they have to have essentially a situation to occur that would require them to move faster than they have been. Maybe that is where the markets, basically the macro markets, have been dropping really significantly. Maybe not, right? We'll have to wait and see. Some people theorize that the Federal Reserve is going to keep playing hardball and not cut rates as fast as they need to, and it's going to lead to the president threatening to force resignation or fire the Federal Reserve chairman, and that may force them as well to lower rates to avoid that. We'll have to wait and see. But the other thing to keep in mind is that it says we're likely to see massive job cuts via government cuts, tech cuts, and housing-related cuts. Remember, if unemployment rises rapidly, the Federal Reserve has to do something. So what does the Federal Reserve do? They'll loosen up monetary policy, aka lower the interest rates. That way businesses feel more comfortable borrowing to hire and pay for these employees, especially in an uncertain time where people are not spending as much. It also increases people's businesses paying employees and all of this. But keep in mind, right now we're hearing about a lot of Doge cuts, right? Government related cuts. But what they're also doing is they're canceling contracts. These contracts are for other businesses to, service the government or whatever. Now, granted, they're saying that there's a lot of waste and fraud, so maybe it wasn't effective use of the money. But remember, those companies that are getting these money, like they're paying employees. Now, they may not be paying them a lot or whatever, but there's people who rely on these jobs, right? That are not even official layoffs because it's just contract cutting. So there's a lot more people losing jobs than we realize in the numbers because we're just hearing about government layoffs. We're not hearing about the private sector as much necessarily, especially with these contracts being canceled and all of that, and what that impact is going to be on the economy. But meanwhile, we are hearing as well that Michael Saylor is basically continuing to really, I mean, he's basically the salesperson for Bitcoin this cycle at least. Last cycle, I guess he was as well, but there was a lot of other macro indicators and events that were going on. But here's the deal, guys. What Michael Saylor's doing is it's a tough job. It really is because he's the only one in the markets that are putting Bitcoin on their balance sheet. Obviously, there's some other companies like the Bitcoin mining companies, Coinbase, and stuff like that, that are holding Bitcoin. But I remind you, none of them are taking out and creating debt to then go buy more Bitcoin. This news just came out the other day. MicroStrategy, just blew through $21 billion in buying Bitcoin. Now it's paying the price. Now, this is according to Investor Business Daily. They also just stated the other day that they're going to continue to raise money through this $21 billion offering to then go and buy more Bitcoin. Remember, they keep buying the top of the market. We've come down about 20 to 30% from the all-time highs. When I'm recording this video, we're in the $80,000 range, and they have not purchased any more Bitcoin just yet. Why? I don't know. But again, we also haven't really seen massive inflows from the Bitcoin ETFs. When the Bitcoin ETFs start inflowing their cash to buy more Bitcoin, it's going to be interesting to see kind of what happens there. But while we just heard about the strategic crypto reserve and the Bitcoin strategic reserve, we also heard that the US is not going to be buying more Bitcoin, at least not yet. But Michael Saylor says the US should buy 20% of the entire Bitcoin supply. Let's listen to what he says. And by the way, don't forget to give this video a thumbs up. Right below the video, it helps. It's free to do. It lets me know you guys enjoy this kind of content. And if you so desire, also leave a comment down below on your thoughts about all of this happening in the market. Let's listen in.
There's only room for one nation state to buy up 20% of the network. And obviously, I think it should be the United States. I think it will be the United States. It's a way for us to enrich ourselves and emerge as a creditor nation in a matter of a decade. It's also a way for us to ensure that we're the economic leaders in cyberspace and the digital economy for the next 100 years. And if we do that, every one of our allies will follow us, and then all of our enemies will end up having to buy into the network once it passes 10 or 20 million a coin, and they will enrich us.
10 or 20 million a coin. Now, let's be clear, guys. I don't think that we may see $1 million in the near future. I'm talking about like 10 to 20 years. But in terms of like 10 or $20 million Bitcoin, this is going to take a lot longer than most people are anticipating. A lot longer. Maybe not even in our lifetime, right? But I do believe the value of Bitcoin will continue to rise, especially as the dollar continues to lower. And this is why MicroStrategy is taking out debt. They're taking out debt in dollars to then go buy Bitcoin because they believe that the dollar is going to continue to devalue, which based on history will, and that Bitcoin will continue to appreciate in value. And so on a long-term basis, which they're playing medium-term basis, right? Like most of their debt right now is due in 2028 to 2030, right? So you're thinking like a 8 to 10 year time frame for their debt issuance to payment. I mean, it's medium term. It's not long term, but in the long term, yes, this strategy probably will end up paying off. It's just a matter of, is it going to happen in the way that we think? Like other companies doing the same thing, governments buying 20% of the world's Bitcoin. I don't know. It seems like the US is not in a rush to buy Bitcoin at this point. Meanwhile, BlackRock's CEO Larry Fink says nationalistic US policies will stoke inflation. And so he's basically putting it out there that some of the policies that are going into place will create inflation over the next 3 to 6 months. And once inflation starts, it's kind of uh, like a domino effect where it just gets worse and worse. Same way when inflation is coming down, it gets worse and worse. Where like you can go to the grocery store and I mean, for a while, you go to the grocery store every single week, the prices were coming down like fairly substantially. Anyway, Larry Fink said that inflation in the US will be elevated by nationalistic policies, including deportations. The head of the US investment company, speaking at a conference in Houston, added that markets are discounting inflation and there will be further cost increases over the next 6 to 9 months. He said, quote, I think if we are I think if we are all becoming a little bit more nationalistic, and I'm not saying that's a bad thing, it does resonate with me that it's going to have elevated inflation. And so what does inflation actually mean? It just means devaluation of the currency, right? So when there is inflation, what does that mean for assets? Like if your dollar is being devalued and the asset is appreciating at the same time, the price goes higher. And so for the markets, in my view, if this is inflationary, which let's be real, guys, our entire lives there's been inflation. It's just been at or supposedly at this kind of target rate of around 2%. But the other thing is, like, people used to not have access to as much data as they have access to in the monetary system. And now with cryptocurrencies coming out, it's kind of like hard money. Like, you can't just print without people knowing. People will know if you print Bitcoin. People know if Bitcoin is newly issued through mining. People know if there's double spending. Like, people can see this on the blockchain, right? It used to be, decades ago, where the Federal Reserve can print and nobody would really know. Like nobody understand. Not only did nobody understand the mechanism, nobody had access to the data to see the mechanism actually occurring. And so there was probably always a more inflation than we actually knew about, right? I think just now it's just a little bit more accessible that people are educated about what's happening in the markets through things like YouTube and social media and all the data that the Federal Reserve actually releases on this kind of inflationary data. And by the way, not just Federal Reserve, but also like private researchers and analysts release their own, um, you know, tracking of prices across the board to see kind of where things are, right? I mean, Coinbase invested in Trueflation, which says always different numbers than what the Federal Reserve is saying. So the bottom line is now I just think that the inflationary rate is higher because the dollar is devaluing more rapidly, right? You hear suddenly, you hear, what is it? Gradually and then suddenly, right? This is what Raoul Powell talks about, the banana zone, where you just end up going straight up. Because we're at a point where the US is in 30, whatever, $5 trillion in debt. That's doubled over the last, 7 years or so. And so if it doubles again over the 7 years, this is going to be $34 trillion just in the negative in the next 7 years. I mean, that's massive, massive amounts of inflation. And the thing is, they can't stop it. This is why Doge, the Department of Government Efficiency, is not really being like most people understand that things need to change, right? That like if you just think about the workforce, right? That it is basically from what Doge has said, it's like almost impossible to fire any employee. And so that creates an environment where employees don't really have to do that good of work. And I'm not saying people are not doing work in the government. I do think that there's like most people want to do really good at their job, no matter what they do. But then you look at government contracts, right? They hire people and then it takes them 7 years to build a road. I mean, I've seen it happen. I was just looking at like a development in a major city and to build a 500-foot road extension, 20 years, right? We talked about over the pandemic in San Francisco, they opened up a restroom in a subway station with one stall, and it took them 10 years and like $20 million to open up one restroom. Like, that's just that weird. How does it cost that much money, right? So I do think that there's a lot more inflation than we know about. And so hearing that there's going to be inflation over the next 6 to 8 months, like, it's not really a surprise. And again, if you're in hard money like Bitcoin, this is actually a positive thing because the valuation goes higher during an inflationary period, as we saw in 2021. And this is all happening while the regulatory environment is easing up on crypto because ultimately there's been a war on crypto. The US SEC is going to move away from requiring crypto firms to register as trading systems, according to the SEC chief. He's directed staff to look at ways to abandon a plan that would have widened the definition of alternative trading services to include crypto firms. We're also hearing that Europe is worried about Trump's crypto push, saying it could hurt Europe's financial stability. Now, when I hear things like this, I go back to what we were just talking about, right? If the euro is being devalued at a much more rapid pace, what do people do? They go out of the euro. Now, whether they go to crypto or gold or whatever else, they leave the euro, right? Which further devalues it because nobody wants it. And it revalues those other areas where people are moving their money into, whether it's real estate, stocks, crypto, or a combination of all the above. But remember, crypto, they can't control like they can control the stock market, like they can control the housing market. And you say, well, how do they control the housing market? Well, they can start increasing property taxes. They could start reassessing homes. There's a lot of people who've been living in their home for 30 years and they've never had a tax assessment. So they're still paying based on the value of the home 30 years ago. And I've seen this happen where people, they go buy a home and the owner's like, oh, the taxes are only $2,000 a year. But that's because they bought for, a wheelbarrow and $20,000 40 years ago for that home, right? They traded a cow for that home 30 years ago. Meanwhile, now, if you reassess that home for, let's say, $500,000, the taxes are going to be more than $2,000. So the new buyer doesn't realize that or isn't told that, which boggles my mind that like the real estate agent won't say, look, they're going to reassess your house. So it's going to be more than what they're paying, when they traded for this house for a cow. And yeah, then they buy the house and then they can't afford it because the taxes are too high. So imagine they reassess homes and then they go and increase the price of homes. So yeah, they can control these markets. But the EU, they're saying that Trump's crypto push could hurt Europe's financial stability. Now, as an American, I only care really about the US's financial stability. Yes, it's important that other countries around the world have financial stability because obviously we're a global economy. But I'm concerned with the US's financial stability over any other country's financial stability, as an American. Finance officials in Europe are concerned that the president's embrace of digital assets could affect Europe's monetary sovereignty and financial stability. They said the U.S. administration is favorable towards cryptos and especially dollar-denominated stablecoins, which may raise concerns in Europe. They caution that U.S. crypto pivot could eventually reignite foreign and U.S. tech giants' plans to launch massive payment solutions based on dollar-denominated stablecoins, adding, and if this were to be successful, it could affect euro area's monetary sovereignty and financial stability. First of all, they're already doing it. PayPal already has a stable coin. Gemini Crypto Exchange already has a stable coin. Second of all, again, US based companies, why do they care what Europe thinks? You know, like we're a sovereign nation. They said the ESM supports ECB's urgency in making the digital euro a reality to safeguard Europe's strategic autonomy. This digital euro is today more necessary than ever. So yeah, really interesting stuff, right? Really interesting stuff. Like they're really trying to push away crypto. And meanwhile, In the other world of crypto outside of Bitcoin, we have the altcoins and what's happening there. Also, massive, massive value obliteration. And not just value obliteration, but network activity reduction, significant. Listen, if you watch my channel, you were aware of this before even the Solana maximalists were aware of this. Because one of the things that we talk about on this channel is thinking ahead, right? You have to be ahead of the market. And so once the meme coin situation with Argentina and the celebrities started, unraveling, I was like, yeah, Solana's going to drop. And the Solana Max is Cryptoviser. You don't know what you're talking about. You're always saying negative stuff about Solana. It's still the best performing crypto. Yeah, I've said it's the best performing crypto. But look at this. Look at these numbers. This is unbelievable. Solana revenue slumps 93% from January highs after meme coin bubble burst. Solana weekly revenue was down to just $4 million last week after peaking at $55 million during the height of the meme coin frenzy in January. So in 2 months, 93% reduction. That is not sustainable as a business. It's just not. It is not sustainable as a business. It is not sustainable to build on, period. And as I've explained to my viewers, it's not that I'm bearish on Solana. I'm just more bullish on Ethereum and Ethereum layer 2s and Ethereum adjacent coins because the Ethereum adjacent coins are more interoperated. They have more products built on them, real financial ecosystems, where Solana, a lot of it is right now, at least, it's just conversation about where they want Solana to be. Solana has fallen into that altcoin trap where a lot of altcoins out here, they just theorize and theorize and theorize for years. Oh, this is what we're going to do. Oh, we're going to create this and this is going to be launched on it. Oh, everyone's doing interoperability. We're going to come up with the best interoperability bridges. We're working on it, right? And it just never comes to fruition. When I saw Solana go from $8 to $250, I really was like, okay, they've been building on this. This is why that we're seeing a repricing. And we're going to start seeing products launching and companies using Solana. None of that happened. None of that happened. We had meme coins and meme coin frenzy, and this was Solana's big thing. Same thing happened last cycle with NFTs. And I was heavily covering Cardano in the previous cycle. And I said towards the end of the cycle in 2021, I said, guys, the fact that Cardano has dumped pretty much all of their money, right? I'm talking about collectively, not just the Cardano protocol, but developers, whales, investors in the Cardano ecosystem at the end of 2021, middle to end of it was really the middle of 2021. They were dumping billions of dollars into this NFT ecosystem. Or build NFTs, expand the NFT ecosystem, more NFT marketplace, but all they were doing was chasing the market. That's all they were doing. And we see the same thing occurring right now with meme coins. As Solana is coming down substantially because of meme coins and the meme coin fiasco, I'm seeing other ecosystems saying, oh, we're going to be launching this meme coin. We're going to be launching a new DEX to support meme coins. And they're starting to throw their money at meme coins. This is chasing the market. This is a failure, and it will continue to be a failure. Last cycle, it was NFTs. Cardano put all their money in NFTs at the end of the cycle, and nobody uses NFTs anymore, right? And it's not just in Cardano, Ethereum either, right? Ethereum, it was happening a lot, but I'm specifically talking about the ecosystems outside, right? So Solana's chasing meme coins. No other products have been released, no other launches, no AI cryptos, no integrations, just meme coins. So this is what we've been spending the last 2 years on. And so the Solana revenue slumping 93%, this is not sustainable. And so the business leaders who really have the money, right? The network operators, the ones who are processing the network and funding development, I would hope that they would be like, no more money is going to meme coins, period. Because this is not sustainable. And getting a 93% drop in 2 months, that means that all of the activity on the network was meme coins. And so you strip out all of that, the whole network is making 4 million in a week. This is in line with altcoins that literally nobody uses, right? And so we are in this kind of weird time in the bull rally. At least I believe this is still a bull rally. I agree with Bill Barheit. I do think that this feels like 2017 in terms of where the cycle is at. I do think we're in a bull market retraction, correction. I don't think we're in a bear market just yet. Now, I could be wrong, but as I've said on this channel, I believe the next pump, whether it happens next week, next month, 5 months down the road, or whatever, the next pump, that's it. That is the pump to sell into. And there's going to be a lot of people that buy into that pump. Let them do them, right? Let them do them. The same way people want to buy meme coins, let them do them. They want to play with meme coins, have fun, right? We're here to secure our financial future, make sure that we have enough to retire, buy a home, pay off a car, pay off debt, whatever your situation is. It's not going to happen with meme coins. Same way that maybe a few people became a millionaire on Dogecoin last cycle, right? But it wasn't the majority, or Shiba Inu, or Doge Elon Mars, or Pepe Coin, PP Coin. But the bottom line here is, stick to a strategy and a thesis. Have numbers in your head today that you will sell into. When this coin hits this price, I'm going to sell 25% of my portfolio. When it hits another price, I'm going to hit 25% more. When it hits another price, I'm going to hit 25% more, right? And then so you're dollar cost averaging out the same way you would dollar cost average in. And if it goes higher, don't chase the market. Because again, watch the crypto ecosystems that chase, because they all are going to do it at some point this cycle. Whether it's meme coins, whether it's AI crypto, whether it's gaming, whatever the category is, they are all going to chase. And once you start seeing chasing, that is the key to get out of that coin or get out of the market altogether. In my view, I could be wrong on this. This is just my analysis of the market. I want to hear what you guys think down below in the comments. Don't forget to give the video a free thumbs up. Hit that subscribe button, and I'll see you guys when I see you. As always, invest responsibly and crypto on.